Hey, this is Eric Gardner, and this is my podcast. Thanks for joining me. I'm going to be recording some personal stuff here and some interviews that might be kind of interesting. So if you like it, subscribe, get notified, and listen and learn a lot. Hey everyone, it's Hey Eric podcast, and I think today is episode 8. I got some fun stuff I wanted to share with you. I actually did something that I never thought I would do this weekend. So I might have mentioned this before. I went to Steamboat Springs to go do some spring skiing. Last year it was really snowy. This year it was like 50 degrees. It was a lot of fun. Never done that much spring skiing, or in that warm of weather, I guess. But we road trip there, and if you don't know, we recently got a Tesla. So we took a road trip in the electric Tesla to Steamboat Springs, which, if you're used to gasoline cars, it's always intimidating. It's like, where am I going to charge? What am I going to do? So this was the first time we've actually driven somewhere that far. I've been driving to work and back with it, and years ago we had a Nissan Leaf, which we commuted on. But this was the first time to actually do it in a Tesla. So what is that like? I wanted to share that with you because a lot of people are intimidated by electric cars. Usually because there's not as many filling stations. When you think about a filling station, it's a gasoline station. Back when we were going from horse and buggy to automobiles, there probably weren't that many gas stations, and people were probably worried, like, well, how am I gonna fill up my Model T Ford if there's no gas stations? I'd rather just ride my horse around because there's grass everywhere, and I can just feed the horse grass, things like that. So that's where we're at now with electric cars. People are worried about road tripping because they think it's going to take a lot longer. And it does, just a little bit longer, not a lot longer. So the way I figured out how to do this, you get in your car and you type in where you're going to go, and it actually tells you where to stop and charge. Tesla has created this great infrastructure of charging stations so you can get where you need to go across the country. It's amazing, where you see license plates with the Tesla. But typically, when I drive to Steamboat from Salt Lake, you take Interstate 80 to Highway 40, which is outside of Park City. You head through Vernal, you head through the Basin, you get to Craig, Colorado, and then you keep going straight on or east on Highway 40 to get to Steamboat. It's how many miles is that? It's probably about 400 miles, maybe a touch less. So I was thinking, maybe I can do that in the Tesla. Well, when you type in the address to Steamboat Springs, it actually recommends you go a different way. It suggests you take I-80, which is into Wyoming, and then once you get to Rock Springs, Wyoming, you head south to Craig, Colorado, and then you finish going east to Steamboat Springs. Now, why is that? Well, it's because they got more charging stations. There's more fill-up stations across Interstate 80 because it's a super common highway. Highway 40's not used a ton. But in Craig, Colorado, Tesla did put a charging station there probably for this specific route. But part of me, so when I typed in that route, the mileage from Salt Lake to Craig is just under 300 miles. And the range on a Tesla is like 315 miles. So I was thinking, maybe I just want to, risk it. Just go the speed limit, don't put anything on the roof and stuff, and see what happens. But obviously I didn't want to run out of battery in the middle of nowhere along Colorado. So we took the recommended route. We left Salt Lake. And I wasn't really smart about this, and I wasn't good at it, but we didn't top it all the way off at my house before we left. So we left with probably like an 80% charge, which is not recommended when you're going on road trips. But the first stop was in Evanston, which, that's about an hour to hour 15 away from my house, depending on how fast you're driving. Stop there, and it actually, the coolest thing about this map is it tells you, how long you're going to need to stop to recharge to get to the next stop. So stopped in Evanston, 10-minute charge, real quick, topped it off, and it's a fast charge. Like I don't understand all the kilowatts and amperage and stuff, but it was a 10-minute charge, and then straight shot to Rock Springs, Wyoming, that's a 2-hour drive about from Evanston, hour and a half, something like that. And then stopping there, it was scheduled for a 35-minute charge, which is a little bit longer. But I think Tesla kind of does this on purpose because they're going to do like a longer stop for maybe you have lunch or something. But it was a 35-minute charge because my battery by the time I got to Rock Springs was probably about 15%, I'm guessing. And that Tesla, it charges so fast from 10, 20% up to 50 or 60%, and then it has to slow down. But you get, like 100 miles recharged within about 15 minutes. And then it's got to slow down a little bit because it doesn't want to damage the battery or something. But so Rock Springs, we stopped there, we plugged it in, grabbed lunch. By the time we were done with lunch, it was fully charged. Jumped on the road. Now this is the longest stretch, and I think that's why I did the 35-minute charge, because from Rock Springs you head east on 80, and then you head south, I don't know what the road is, to Craig, Colorado, where they also installed superchargers. But that was the longest portion of the trip between charging stations. And wow, if you know me, you know I like to drive fast and aggressive. I don't stay off the throttle at all. It's fairly aggressive driving when I'm driving. So the first, and that affects you in a gasoline car with your miles per gallon. It also affects you in an electric car with your miles per watt or amp or whatever. So when I get onto that side highway to head south to Craig, the estimate for where my battery's going to be at when I get there is starting to go down, because they basically want you to get to your next destination with like somewhere between 12 and 20%. They don't want to risk you running out of juice somewhere. And because I was driving fast and aggressive, my battery's going down. Like all of a sudden it's like, you're going to get there at 10%. Well, it's not telling me this, but I'm noticing it. So then, obviously, to make sure I get there and I'm not going to run out of juice, I start driving a whole lot slower just to make sure. I wanted to be safe. But luckily, pulled into Craig, Colorado with 10% juice left in the battery. And that comes out to be, you got like 40 miles left, I guess. And I'd love to try and run it even lower, but I didn't want to do that with my family in the car, obviously, because if I break down in the middle of nowhere, I'm okay with that. So then we stop there in Craig, and it's another 10-minute charge, super fast, because it goes from that 10% low battery I was at up to like 50 in 10 minutes. It's incredible. And then from there, it's only 40 miles to Steamboat Springs, so you don't need to fill up that far, because once you get to Steamboat, you can charge there wherever you're staying. They got lots of chargers there. So overall, it was a good experience. Did it add a little bit more time to the trip? Yeah, it probably added about an hour, I'm guessing. It was a 7-hour drive, I think, total. And that was, us stopping for lunch, stopping to pee a few times, and make sure we were charging the car correctly. But all in all, it was a really good experience. Am I mad because I couldn't take the more direct route and save an hour? Not really. Obviously, you're paying for the fill-ups at the supercharging stations, and I still want to do the math to see how much I paid per mile, I guess, or per fill-up, because it was definitely less than the $4.50 a gallon that gasoline is right now. So all in all, the cost to operate the vehicle was less, but it was also just a fun experiment, and Teslas are fun to drive. Any electric car is a lot of fun to drive. But I wanted to share that because spring skiing was fun. We just took a different way to get there and had a lot of fun along the route, or along the way to get there. A lot of fun skiing. And now we still got spring skiing here in Salt Lake. We might get another little storm, but it's been warm. It's been real warm, and it's nice. The valley's nice right now. One other thing I wanted to share with you right now is I've been reading this book. So I'm not a big reader. Most of the books I read are either historical or like educational. I don't read much fiction. It's just nothing I've ever really been that interested. I've read a few fiction books, probably for courses I had in college, but reading in high school and junior high, didn't read very much. Not going to lie there. But this book I'm reading right now, it's called Contagious. And Contagious is basically, it's about how things catch on, like why things go viral on the internet or why restaurants get popular. And it's been a really fun book to read so far. I think I'm done with it. There's like this post-epilogue section or something that I'm reading now. But basically, it talks a lot about why things go viral. Why do people talk about other things? Because is anyone sharing this podcast? Yeah, there's probably a few people. My mom, my sister, my wife, those people who are near and dear, close to me. But for the most part, things go viral or things get shared. When they're memorable, when it's fun to tell the story to someone else. When it's unique and memorable, like those are all things that make things shareable, or when it's valuable to share it. Like say you got a great deal on laundry detergent, you're gonna share that with other people so they can take advantage of the great deal on laundry detergent. So things like that. But the book, it's been a lot of fun to read. I'm hoping to, understand what makes things get more popular. Just because it's good to understand those things. You always wonder why, like Wordle, for example. What made Wordle blow up? I think the game's been around for like 3 months, and I think it was the Wall Street Journal already bought it for, I don't know, millions of dollars. But it's just, you think about how things spread in the internet, in our communities, in our society, and it's fascinating to me, and that's why I wanted to read this book. So if you're looking for a good new book to read, check out Contagious, because it's a great read, and it's super fun to understand how and why things spread so fast through our community. Oh my gosh, now I got to talk about an offer recently. So, like I've mentioned before, I represent a lot of sellers, and when a seller gets an offer, when they get a bunch of offers, because typically, we get, 3 to 5 to 10 offers, I always put them all into a spreadsheet, like the highlights, basically. I talked about the purchase price, the earnest money, the contingencies if they keep any of them, if any earnest money goes non-refundable, and whether a buyer is asking for a seller to pay for a home warranty, because they often do that. Recently it's been 50-50, but we'll talk about home warranties later. But when I put together this spreadsheet, or when we talk to a seller after the fact, it's always, their eyes go straight to one number, and it's always the offer price or the net income price. And in this current market, people will promise you the moon to get a house under contract. They'll even lie about whether it's a VA or a FHA loan, because a lot of people have the perception that a conventional loan is going to be safer, even though I would disagree with that for sure. But people always look to that number, that offer number. And when I'm consulting with a seller at this point in the transaction, I'm telling, okay, that's a good number to look at, but let's dive deeper. Do we have a good pre-qualification letter from the lender? And what I do is I always call all these lenders to see, but then also, how much down payment are they doing? If they're promising 20% down, or 10% down, 5% down, whatever it is, do they actually have that money? Because like I said, there can be a lot of white lies in some of these offers. So, I like to ask also for proof of funds. And when you talk about proof of funds, usually it's, a cash buyer. So some cash buyers, like, I'm buying this house cash for $500,000. I'm not getting a loan. So rather than a pre-approval letter, they send a proof of funds letter from either their banker, or they send a screenshot of their bank account just showing that they have the money. And I've been advising my sellers recently, let's make sure, and this is part of my job, but I always tell my clients, let's make sure that the offer is actually going to get to the finish line, because you got to move. And just because that one offer might be $5,000 or $10,000 more, will it get to the finish line? Did they add any white lies in there? Are they going to spring something else on us? So that is why it's so important to check for proof of funds. Where's the cash coming from? Are they approved? Did they tell us everything? And so sellers, when you're thinking about that, the net number is great, but let's always check for the rest of these items, these other due diligence things that we want to make sure in an offer, to make sure your house sale gets to the end and gets to the finish line. All right. So speaking of home warranties, yeah, that's come up a lot recently. People have been asking me about it in the current market. Well, 2 years ago, before the market was nuts from COVID and from people moving to Utah and not having enough listings and having super low interest rates, typically a buyer in their contract they'll ask for a home warranty, and they'll ask for the seller to pay for a home warranty. And home warranties, they can vary from $300 to $1,000 or more. And it's like any type of warranty or insurance, you pay an upfront premium for it, and then there's kind of a co-pay down the road. And they usually last for a year, and then a buyer can renew it every year if they want and pay that premium again. Over the last year and a half, premiums for home warranties have gone up. Now to get anything covered in a home warranty, you need at least a $600 home warranty. You can get cheaper ones, but they just don't offer much to a client, so I don't recommend them. But what do they cover and how much do they cost? So $600, like I said, is a minimum. But think about, if a water heater goes out and your home warranty covers that, if it's a good home warranty, you're just going to pay a deductible. Rather than hiring someone to come and do a water heater, which is probably at least $1,000, probably closer to $1,500, because a cheap water heater is $600 to $800. Installation is going to be $500 or something. Rather than paying for that plumber or whoever does that to come and fix it for you or replace it for you, you're just going to pay a copay. Depending on the home warranty, depending on that premium, $100, $200, something like that, rather than the full $1,500. So home warranties are great because they can mitigate some of that risk from buying a house that you're not necessarily familiar with. And if you can get a seller to pay for it, as a buyer, it's awesome. And sometimes the seller won't pay for it in this market. Sometimes the buyer says, I'm going to pay for it because it means a lot to me, so I'm getting it no matter what. But I always recommend getting a home warranty because when you do an inspection, it's not going to necessarily show everything. It's going to give you the high level, big things going on, but it's not going to show everything. So if you get a home warranty, whether you as a buyer pay for it, if your seller pays for it when you write the offer, or however you procure it, you have it. So if something breaks, rather than coming out of pocket, $1,000 or $2,000 or $3,000, the home warranty is just going to charge you a copay, whatever they're called, and then they're going to fix it. And then a year down the road, as you get to know your house more, maybe you renew it, maybe you don't, but it helps create some of that peace of mind. So as you go into something that you're not familiar with, you're not, you're protected, I guess. It's like insurance of any sort. But yeah, think about it, at least $600 home warranty. And if you have questions, let me know. We work with probably 2 home warranty companies, 2 or 3, that do a great job. And I'm glad I try and make sure my clients get one every time they buy a house because it's important to that. So one other thing I wanted to go over real quick. Let me pull up this website. Not that you're going to see it, but so Adam Data. It's a website I talk about a lot. They do a lot of research when it comes to homes, mortgages, real estate market, general market. And they were talking about mortgage originations in a recent article. And I wanted to read this to you because mortgage originations, this story actually came out before the Fed rose rates. So the Fed recently raised the Fed funds rate 0.25%, which the mortgage rates tracked it a little bit. They bumped up to 4.5 right now, which is still a good rate. But even before that, in Q4 of last year, originations were down. And origination is when someone applies for a loan, gets a loan. So the report also noted that residential purchase mortgage originations, so not refinances, but purchases, so when I'm buying a home or you're buying a home, decreased from Q3 to Q4 in 2021. In 87% of the metro areas analyzed. So 87% of the areas, there was fewer originations, so probably fewer homes sold to some extent. The largest decrease, it was in Utah, that's why I bring this up. It was in Provo, Utah, a 55% decrease in mortgage originations. Adams' report also stated that residential purchase mortgage lending increased from Q3 to Q4 in 2021 in 13% of the metro areas analyzed. So that increase, it occurred in Salt Lake City, 17.7%. So Provo was down 55%, Salt Lake was up 17%. I don't know why. It's just fascinating information. I don't think there's necessarily people choosing to move to Salt Lake instead of Provo, kind of with that whole tech corridor or Silicon Slopes in the middle of it all. To me, they're very similar. Like if you're commuting for a job, usually you go somewhere because you like, outside of your job, you like, the area, the hiking trails you're nearby, recreational things like that, places you want to be. Maybe you go somewhere else for a less expensive house, like, Salt Lake housing, because it's the downtown area. It's usually a little bit more than Davis County or Utah County. But it's something important I want to mention because, these things are happening. This market is shifting a little bit. I've already seen more listings coming up and more listings sitting on the market. And, why is that happening? I think some of them are just overpriced piles of crap, in my opinion. Like, they're not nice houses and they weren't priced appropriately. Mortgage rates creeping up. A few people are leaving the market. We're starting to see this market balance out with the rate increase. So all good things for the long-term stability of our Utah market. So that's why I wanted to cover it. But thanks again for joining me on this podcast. If you have questions, go to heyeric.com. You can download my free sellers report. You can hit me up on social media, ericgardner.realtor on Instagram. But I'm so glad you joined me, and let's stay in touch.